Hello guys, welcome to the Trading Parrot and to another morning update. This is going to be a quick one. Hopefully we can cover everything that happened overnight. Bitcoin went into 95.8k overnight, breaking the 100k. That's what we already covered yesterday. But we got some new developments on the 4-hour. There is an ABC pattern that could turn into some bullish relief. We are, after all, on a Friday, and we know that very frequently we have some bounces on Friday, sometimes some bullish bounces on Friday. And since it's been all bleeding so far, led by some events that I'm going to cover later, there are some new macros that we really need to explore there because they are affecting general markets and everything, not just Bitcoin, of course. So today I'm going to cover the 4-hour. I'm going to cover the daily, which is sitting right next support, new daily support. So we need to assess the possibility that we see a bounce from here. And we also need to cover the CME gaps and a bunch of other things that are very important. So let's start with the 4-hour. Hit the like, subscribe, write down a comment down below. That is mandatory. Otherwise, YouTube is going to chase you, go to your place, knock on your door, and kick you in the butt. Okay, so you don't want that. Let's make sure that we get all those likes. Anyways, let's go back to topic. We have an ABC pattern in here on the 4-hour. So from 111 back down to 98, up to 108, and then down to 95.8. That's what we did. We achieved the full technical target of the head and shoulder that we formed around here that ended up breaking down early November, and it reached the full target by 15 days, mid-November, okay? In the middle, we have this other head and shoulder, the one nested around here is already getting a bit noisy. Let me remove it. That target is already completed. This neckline is no longer valid, but the ABC now stands there. Okay, so that could be potentially a move up in the price. And it could be just a dead cat bounce into the liquidity, maybe into 102 or 104, where we have those clusters in the volume profile. We don't know, but it's a bullish pattern, and we need to assess whether it's actually gonna help us move anywhere. Let's look into the RSI. That RSI is also giving me a clue that it's been only down, just swings, and we are on a lower area here at 32. We're getting very close to start being below 30. And RSI below 30 is oversold. That is not enough to trade, right? But is in an area that I like to see this shape coming down of swings, and then eventually from the low end doing a breakout. So if we can maintain this thing coming down, obviously that means more bleeding, but no one say that we are necessarily going to go as low as 17 on the RSI 4-hour. So we could break out from here, and if we do, that will be against a resistance of 39 at the time I'm recording. So we need to identify that resistance, the one that we have now, in case on a Friday we resume and we do something interesting. But if we see rejection there, we could lead into 17 on the 4-hour. So let's identify those levels in the chart immediately. That resistance, 39 RSI, consists with 98.7. So if we go beyond that level and we put candle closes on the 4-hour there, we're going to see some low quality breakout to the upside on the 4-hour. Notice low quality, because it's not the full development to the downside. So this has done just an extension of probably 1 on the Fibonacci on this ABC. It needs to do, not it needs, but it will need to do an extension of 1618 to be a high quality. And same for the RSI. It will require that the RSI goes fully swinging down like a spring there into areas maybe under 30, 20, something like that. Global support is 17, and that is currently located, as you can see in red on the right hand side, is 83.6. Let me show you a line there so you can see it better. So it's 83.5 at the moment. That is full reset of the 4-hour, which is not guaranteed, but good to keep an eye on those ranges for whatever strategy that you're trying to implement. If you have a strategy, I hope you do. In here on the daily, you can see we just bounce off the green line on the RSI. Let me show you that. That is our 32 RSI. You saw yesterday, I already confirmed that that was a fake out. The breakout that we just had a few days ago, that broke out on the 10th or 9th of November, and it faked out, confirmed by today, Friday. And we are now in the next level of support, 32. That 32, yesterday we identified that level. Let's move this bubble somewhere else. And we say that our next level of support was going to be, I think I gave a number, something like 96.5. And we are bouncing off that level so far, okay? No one says that that level of support must hold. No support is guaranteed. It's just support, okay? So we are bouncing off daily support at 96.5, but if we cannot hold that level, it could become a 90.7. And there is some reasons to believe that we could go there because we just took the biggest liquidity pools, the biggest. But there was some sort of triangle in the histogram of liquidity that we're going to look at later in the video, so you can quantify it and make your own decisions. I still haven't averaged down on a second order on my long, if that's what you want to know. We didn't produce the MACD cross, bullish cross. That's also important. And on the CME chart, and let me save this one. I'm saving so you guys can go to my Telegram channel and be able to access them. And since I'm doing just these videos, I'm not mentioning my preferred exchanges, but have a look at Tubit as an exchange. Is magnificent. There's a link in the description. If you open an account there, you're gonna get 30,000 in rewards max, of course, if you deposit the maximum. Let's find the CME gap. CME, where are you? Here. There you go. And this tells me that we have already taken 3 out of 4 CME gaps. So we have only one left at 91.5, which yesterday I showed you in full detail in the video last night. And we noticed that it's kind of a mixed bag. Is it really a CME gap or is it not? Because there are some weeks there on the 1 hour time frame. You go ahead, you look on CME chart, look on Binance at the same area where we find that level. I think it's in 2023, and decide. Let me know in the comments if you think that that CME gap is valid. It is relevant because it could be, another incentive to go deeper into 91 and then do sort of a loss of support on the daily, and on the 4 hour bleed a little bit more. All right, so let's go with the next information I wanted to share. I wanted to cover liquidity. Let's go into liquidity. That is urgent that we cover it. So yeah, we took the biggest level of liquidity. We talked about that level. I was really scratching my head when we did the 20 billion liquidation, why we didn't take this one. We came so close to 98 or something, or 99, I don't remember. Maybe just 101. Anyways, it's too early in the morning to remember every price in history. But we left it there. That's the point. And now we came back to take down that level. And the part that gets really interesting in here is we need to make a decision. We need to decide between saying we came here just to take the largest pool, the red, and then we could bounce back up thanks to the ABC and the extension of one on that pattern, and the daily support and whatever else it's going on around here, which is there's a lot going on around here. We could bounce back up above 100K and resume some bullish November. We need to be prepared for any option, even if it's just a 10% probability, but just in case. Or are we gonna take down all of this? So do me a favor, watch the video yesterday and compare this yesterday versus today, particularly the side, the right hand side histogram, because this was pretty large there. Now there is still some there. This might be maybe 2/3 of the red, the yellow, and that is still incentive on the table to come down up until 91. Okay, Then there's lower pools, there's liquidity pools on the longer term charts as well. Yeah, but we have pinched already 95, and that was a long-term pool as well. Let's look at the order book. We have 3K defending 96.5. That is how it looks this morning. And this, let me put back down that, and let's zoom in here. Let's see what's going on in here. So the low is 95.8 today, and there's, a cloud of defense there to contain the price. That doesn't guarantee anything, but I see kind of orders across multiple exchanges up until around 93. Some orders are being moved from lower to higher. That's also some considerations to take. And let's see the levels of liquidation. I want to see the delta. Please, phone, wake up. If it doesn't wake up, I'm going to just go straight into the news because I wanted to cover... Right, let's go to news because something is not working today with High Block Capital. So Bitcoin fell sharply under 100K in US market hours after rebounding to 104 overnight. That happened yesterday. Intraday volatility has spiked. We have over 1 billion leverage positions liquidated across all markets in crypto, Bitcoin options. 5 billion are expiring today on Derbit. Focusing max pain is 105. Interestingly, we are like 10K away from max pain. So that means that market makers must not really be happy about being around here. A bounce from 95.8 to around 105 will be pretty bullish if they manage to take the price to the max pain. And we have a few signals in here that I don't really care because those come from people that talk just rubbish. Macro and market context, the sell-off directly follows weaker than expected economic data from China. So that's the new thing. So on China getting some bad news. In the past days, if you remember, many people in my Telegram channel were noting as well, and in my Patreon community, that on the sessions in US, in New York, there was a sell-off consistently. More whales selling on Binance. But now it came from China. Okay, so weaker than expected economic data, and the proof of that is not just the timing, the session, but also that it happened primarily in OKX this time. So it was OKX churn, sparking a risk-off move in global equities that spread into digital assets minutes later. Of course, we are the last element, crypto responds to everything else. We have seen already a red market in general markets. Nvidia, Tesla did pretty bad, I think minus 6% yesterday. Crypto is now linked more closely than ever to macro liquidity trends. Analysts expect conditions to remain choppy for 1 to 2 weeks until fiscal flows resume, but warn that 2025 highs may be set if macro does not improve. And I agree with that. And there's tons of influencers still calling for new highs. What the hell is going on with High Block Capital? Come back. Come on. You can make it. There you go. We got the delta is now, let's see, where is the delta? It's not giving me a reading. Anyway, it must be really high. It's probably around 500K, 600K, if not 1,000. What number is that? It's not showing the number. Why did they change the UI? Anyways, I wanted to see and quantify it because that could be additional incentive to go back up. We just took some liquidity in the heat map in here that this is the 1 year. We are right there in that area where there's full of liquidity. Let me see here. The longs are at 76. So if these longs remain 76 and they start pushing even higher, eventually they're going to get away with finding a local bottom. So that's what I said yesterday. Not because we are at 70, we're going to get precisely the bottom. This doesn't work like magic. It just tells you that more longs are coming in and they're defending the price and they're in positions, and eventually the price, finds equilibrium and starts pushing back up. The order book looks with some green still in shallow deviations of the price from 0 to 5%. There is some defense, but 5 and beyond is in the red. Okay, so if there was a move up 5%, it's going to have to confront that. So be careful, because we might move up today, but it's going to confront a cloud of resistance, which I didn't see in Market Monkey Terminal. I don't know where is it placed. So far, we have an order roughly around 105. And let's see. Oh my God, this is so difficult. And 105, well, we cannot see it in here really, because it gets up until 104.5. But in the cloud in here, there is a line there at 105.4. There you go. That's the number I wanted to see. That is currently the defense, and we have a cloud of defense below the price. We'll see how things evolve during the day. I think if we start going into the low 90s, I'm going to get serious about adding a position. And the main reason I'm not necessarily entering in the biggest cloud of liquidity pool, which it was 95.8, 96, is because I fear that general markets might accelerate on Friday and do a little bit more harm and close deeply in the red. And then we have, weekend CME gaps form, and we don't close a CME price high enough, then we don't have something to hold on to, like an insurance price on the top. So I'm being cautious. I'm being cautious in here, right? We have a 73,000 range to deal with, and we are already down more than 10,000 from my entry price. 10,000 was 101, and we are 95.8, so that's 15K. So I should be actioning something soon. I will let you know. If I do, I will share it in my Patreon community. Any tier will do. I'll see you in the next one. Take care. Hit the like. Do not go anywhere without hitting the like. Subscribing. If you're not subscribed, what are you doing? I'm getting 2 subscribers per video. This is a slap in the face every morning for the trading part. Do not do that. Subscribe, write down a comment down below, and then I can let you go. Enjoy your Friday, and please do not get too drunk. Bye-bye.